Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
Get up, stand up for your rights. Listen, get up, stand up. Don't give up the fight. Get up, stand up for your rights. Get up, stand up. Don't give up the fight. Hey.
Good morning, everybody. Welcome to Snipers Live Trading. Let's get up, stand up. Don't give up the fight. How's everybody doing this morning? Dave, how you feeling? Dave Smith. I know you got the...
Look, Jim
Yeah, a bit ropey, I'm afraid, but I thought I'd just give it a go. Got COVID yesterday.
Sorry to hear, man. Look at Jim Whitfield.
Oh,
Where are you, Jim? Oh, you're muted, buddy. Oh, hot air balloon riding.
Yeah,
Oh my gosh.
that's beautiful.
Are you going to do the call on the balloon, man?
Yeah, I think so. Might as well have fun. I don't know if you can hear me.
Yeah.
It's
Wow.
cold here, but it's exciting, isn't it?
Oh my gosh. Yeah. Are you going to go up?
No, I'm got my feet on the ground. But they're going to be going up here in a minute. So I'm not going to be trading, but I'll be listening.
Hey, Gerardo, I think we should do snipers in a hot air balloon one day.
Oh, that's a great idea.
Let's do it. We just got to make sure we have Wi-Fi. Well, I'm on week 2 of my beard. It's starting to come in and trying to decide if I want to have a gray beard or not. So we'll see. And then Johnny, you know, you were in that introduction for Landmark a while ago, and both of us were saying I need to have more fun in my life. And so what I've started to do is this.
Holy frioli.
I'm getting up on a surfboard now. Old man on a surfboard. So yeah, just finally getting out there and having some fun. So good morning, everybody. The markets are really unpredictable right now, and we're going to get in and take a look and figure out what we can do with what's happening. And you know, the biggest news most recently is what's happened in Israel with the attack by Hamas. Hamas, and quite a large number of people were killed. And so that's wreaking havoc on the market this morning. The futures are down as a result of the Hamas attack. And then oil prices have jumped because of the Middle Eastern conflict. So, and then the weird thing is on Friday, though, we had a strong jobs report. Let me go through the futures here. We had a strong jobs report, which is not normally in a high inflationary environment. That's not what we want to see. And the markets bounced hard on Friday, which was weird. You know, it's like institutions decided in the wake of a strong jobs report to buy the market with great enthusiasm, and the futures here on high volume, we got a big bounce. And then today, pre-market anyway, we're down, but still within the body of the candle on Friday. So for me, I'm like, oh my gosh, I don't know where we're going to go. I'm feeling less sure about predicting anything at the moment. This could very well end up bullish today, despite what's going on in Israel. So the bearishness, the bearish pattern is still in place. We've had this bounce off the 200. So now I'm not sure. Are we going to bounce from here further, or are we going to come back down and test the 200-day average? I don't know. And for that reason, I'm very cautious with the markets right now. So much uncertainty, lots of moving parts. Predictability is lower than it was just last week. when the S&P 500 broke a head and shoulders pattern all the way down to the 200. I thought maybe we get a bounce, but not like that on Friday. So direction is a little bit sketchy at the moment. Let's go through the rest of the futures here. Let's look at the NASDAQ. Now, the NASDAQ has not broken down like the rest of the market. Its head and shoulders pattern has yet to be breached. The neckline has yet to be breached. So tech is holding on pretty strong while the rest of the markets have been breaking down. Let's look at tech itself. Big update on Friday with tech. Pre-market, we're down a little bit, like 167 or so to open this morning. Let's take a look at the Dow. Same similar pattern, 33,000 was acting as support on Friday. Another big hammer day, big up day on Friday. Head and shoulders pattern still intact. So similar pattern to the S&P 500, the Russell 2000, same pattern on Friday. Today down a little bit. I'd say the small caps are probably the best bearish bet at the moment. See if I can widen that a little bit. My ADD, there we go. So that's the story. Oil, as you might expect, which came down after Biden's announcement to put pressure on Saudi Arabia to normalize relationships with Israel. And part of that implicit was that Saudi Arabia would increase oil supply, and that dropped oil, and now oil's up because of what's happening in Israel. So where's it going from here? Probably not down. I don't think this, based on what I know about this conflict so far, I don't imagine that it's going to be over in a week. So I think perhaps a bullish prognosis on oil, despite this bearishness here, this collapse in oil after Biden's announcement. Now the new conflict. So now we have opposing forces, right? We have potential Saudi increase in supply of oil, and then the potential decrease in supply with what's going on in Israel and Palestine. So, but I would say probably not down much from here. So this could be a decent longer term credit spread, or even if you want to get into the heat, you could sell an 80 put spread. Maybe we'll do something with that. And by the way, always the invitation is, if you have any stocks that you're looking at, please raise them sooner than later. And then Gerardo will introduce your stocks into the conversation, and we can go find some credit spreads on stuff that you're looking at as well. All right, so there's oil. Gold is up today. That's not surprising when you get a conflict like we have in Israel now. So gold is up this morning anyway. It was up also on Friday. And so the first thing I look at is, well, what's the US dollar been doing? Because that's normally what's going to move gold. And the US dollar got weaker on Friday, driving gold up on Friday as well. Now, pre-market gold is up, but what's the US dollar doing? What was that symbol that you all gave me a couple of weeks ago for the US dollar? Is it dollar DGX or something like that? I can't remember. Somebody gave it to me 2 weeks ago. I don't have Forex on my Thinkorswim. So if whoever's told me 2 weeks ago, if you're still here, please let me know. But basically what I can see here pre-market is that the US dollar is somewhat pretty much flat, maybe up a little bit, and gold is up as well. All right, so that could be a sign of risk off. Okay, so money flowing into gold because of a conflict in the Middle East. And that looks to be what it is based on what I can tell about the US dollar, the price of the US dollar. We'll know exactly when the market opens here in a minute. But it looks like risk off on gold. So another potential trade we could do today would be to sell a put spread on GLD somewhere. Now that's kind of like jumping in front of the train and counting on this bounce holding counting on this conflict keeping the price of gold elevated. So maybe we'll do that. I'm not really excited about much this morning. Sometimes it's best to sit on the sidelines when there's so much uncertainty, so much weird stuff happening on Friday with markets rising in the face of a strong jobs report. You know, it's like, man, things aren't behaving like they're supposed to. So, you know, we got to be careful. And I just noticed something on the gold chart here. See this? That's a support level. Let's call it 168. And then that's where we got our bounce on Friday. Thursday, Friday, a bounce at 168. So we could step up and sell a put spread at 168 this morning. We'll see. All right. So the uncertainty is we got to watch out for. Now, let's take a look at the rest of the stuff here. Let's take a look at oil, which is up as well. I mentioned that one already. So there's oil. It's up big this morning. Another potential trade on this could be to sell a put spread underneath, counting on this bounce to continue. Let's see. Natural gas. Some of you are in the UNG trade and took stock. So if you did, you should be really happy right now because the natural gas ETF is up at 774 and it's not quite higher than this peak here. It's right at the 200-day average. We have a put spread at 6 that's doing really well. Now we were selling at 650 and 6, the puts at 650 and 6. So if you ended up taking stock, then you now have a nice little profit. You may choose at this point, I would consider selling an 8 call spread or an 8 short call on your long stock if you have it. If you do have it, please feel free. And you have questions, if you own the UNG based on the way we've been trading it, then please do speak up and if you need support. Let's look at the VIX. VIX is up, of course, a little bit with the markets down pre-market. So the VIX is high. It's in the high range. The VIX is volatile. Up, down, up, down. So there's volatility and volatility at the moment. Uncertainty. Where do we go from here? I don't know. Yeah, this is one of the first mornings since I started where I'm like, man, I'm just not sure. I'm just not sure where we're going. I mean, I could build a long-term bearish case on, you know, XLF, real estate, that's regional banks, XLRE, real estate under hot water, a little bit of a bounce on Friday like the rest of the market. It's down, it's pretty much flat to open, the real estate sector. Mortgage rates are at 8% now. We talked about all of that over the last few weeks. And so the weakest sectors really are that are based on interest rates are banks, regional banks in particular, and then also real estate. Those are the most bearish sectors. Let's look at some of these other ones as well. The other one that's quite bearish right now is utilities, dropping hard. Bonds, which I didn't look at here. Let's look at bonds. How are the bonds opening up now? Oh, what is it? /ZB. 30-year treasuries are bottoming, so to speak, down on Friday, a little bit sideways. Bond yields are rising. Banks, which invest in bonds, are taking it on the chin as bonds have dropped with rising yields. That's putting pressure on banks. And I just don't see that pressure being relieved anytime soon. So that's why I'm saying XLF stocks, KRE stocks, regional banks, despite any recent bounces, I would say that those sectors are a good place to look for long-term bear call spreads or even short-term bear call spreads. Okay, let's take a look at the news a little bit this morning. We know about the attack on Israel.
Excuse me, Mike.
Yes.
Just to make it clear, so you still bearish on financials, right?
Yes, I am. Yeah, I am. Because that interest rate issue isn't going away. You know, not for a long time. The Fed has said they're going to keep the interest rates higher for longer. And so that keeps the bond prices higher. Bonds become more attractive when they pay higher rates. And so that at some point with a volatile market, you'll see some risk off and money flowing into these bonds, which are paying higher interest than in a long time. So all of that sort of puts pressure. The interest, it's interest rates. It's interest rates. So being smart about interest rates, understanding what interest rates do to bonds and what bonds do to banks, all of that is really important. And that's why we spend 15 minutes each week on intermarket analysis. So it's really important that you get into that. Well, you can just watch me do it every week because that's what I do, right? Now, let's see what else I was going to show you here. I don't see the 5 things. Yeah, 1,100 dead. That's just breaks the heart, man. It's terrible. Oil surges as Israel conflict reignites Middle East volatility. So more and more, I think that perhaps a bullish trade on USO would be a smart idea. Oil. I'm just checking. I haven't seen this site just yet. There are some stocks that are moving pre-market, and one of them that I like is Lockheed Martin, and we're going to look at this one to open here in just a few minutes. I'm going to try to place this one at the start of the market, and what you can see here is, well, it's not in there now. I don't see it now. It was on the list before, so it's come off the list. It's not as high as others. Now this is new. This one. So when I go to this chart, this barchart.com pre-market trading, now I'll put this in the chat box for everybody. If you want to go to this site, this is what I like to, when I look for this pre-market snipes, this is where I like to go. Earlier, Lockheed Martin was on the list, and then I get the list, and then I go down it, and I'm looking for stocks that are, you know, $10 or higher. And so I see a couple here. One is on ANAB, never heard of them. I can take a look here to see if it has options. It does. Mega wide slippage, at least now. So ANAB could be an interesting one. The stock currently is trading at 20. That's not such a huge gap. It's at 21, let's say. So it's up here. So that's a somewhat interesting one. And then we've got EHang Holdings. It's gapped up today. I also want to check the news here as well. Strong support at 16. The stock's trading at 18, right about here. Does it have options? It does. And then I'll check the news. NASDAQ proves the index will spend trading of ADS. Okay. Okay, the shares are halted anyway. Okay. There's a few more in here. Check them out if you want and help me go through all of these. Now, the other one that's no longer on the list is Lockheed Martin, and this is one that got my attention this morning. I'll probably get this one on before I show you the portfolio, which is doing well. Now, what I don't like about this is Lockheed Martin was tanking. Now, what's happened most recently, well, you know, the Middle East conflict is helping, a defense contractor. So it's up to 421 this morning, way up here, partly because of the attack on Israel, I would expect. And then there's another piece of news that came out today on Lockheed. They lift their quarterly dividend and okayed a $6 billion additional share buyback. So Lockheed Martin is buying back $6 billion of public stock. That's a huge vote of confidence by them in their future earnings. their confidence in the stock. So they're buying back the stock $6 billion worth in the 400 range or so. So those are two good pieces of news coupled with the attack on Israel. And I'm liking this one as our short-term trade for today. Now, the next question is, where do we sell? So let's take a look. The stock currently is way up here at 422. And so the way you do these credit spreads, and this is really sort of the lesson for today, is just a review of how we do these short-term news-backed credit spreads that we call snipers. With the stock at 421 to open, where do we sell? Well, then you look at support. And so you look at the peaks. So there's support here right around 415, right there. It's also resistance there. 410 was really strong resistance right here. Look at that, resistance, resistance, resistance right around 410. So 410 is sort of where I'd like to potentially go. And if you can get something down here at 400, that would be good as well. So the way it works is 415 is as close as I would get. We'll get more credit. Then we'll get at 410. Then we'll get at 405. The credit reduces as you move away from the heat. And as you get closer to the heat, the credit increases. The other thing that happens is as you get closer to the heat, the probability of profit decreases. And as you move away, the probability increases. So there's a sliding scale between probability, this hand, and profitability, this hand. If you want more probability, you take less credit. If you want more credit, you take less probability, and it's a sliding scale. And there are no absolutes, like which is the best way? There isn't one. There isn't a best way. You have to decide for yourself. Are you a probability trader? Or are you going to step up and try to get more credit? Where I lean, and the reason we've had 85% wins, give or take a few percentage points over the last year and 4 months or so, is because we lean on the side of probability. There's something good for the psychology when you win most of the time, which is what we've been doing here. So I'm thinking I'm going to see what's there. All right, I'm going to go out to October 20. Typically, we go 2 weeks. We might even check the this Friday's expiration, October 13s as well. Now, what happens in the morning, just show the option chain. Here's how it works. In the morning, with this news, there will be a lot of implied volatility. A lot of orders are already coming into the markets. And so with all this volatility in the stock, the volatility in the Middle East, the IV will be elevated across the board this morning. It'll be higher in the shorter term options, and then it drops off as you go further out in time. So it's possible that we could sell a Friday trade and maybe come in at, you think we're going to be above, let's say 410 or 415. We may be able to get something on these shortest term options. It's possible. And given all the tensions and all the nature of the news, I'd say we have a pretty good shot of getting some decent credit right at, let me see where I want to go. I'd have to wait and see what we can get here. Maybe 410. Let's try 410 short term, see what we can get. So then I've got my option chain set to vertical, and I got my puts on the right, and then I take a look and see what was there on Friday. Now, of course, the stock is up 25 points. So we're not going to get $1.20 here or $2, but we might get something. So I'm going to put an order in here for $1. And then when the market opens in 5 minutes, we'll see what's actually there. Because I don't know what the prices are just yet. They're not reflective of the opening prices just yet. So let's try for that one this morning, and then I'll play around with it. We might go to the next Friday. We might change the strikes. Let me pop this in the Sniper's live feed so you can all get a good look at it. Okay, so this is the Lockheed Martin short-term credit spread. Okay. So let's see what that, I've got it in for $1. You know, the last thing I want to do is put it in for 50 cents and get it right away. I want to see what the opening price is. So we got about 4 minutes before that happens. And in that 4 minutes, let's take a look at the economic calendar for the week. And we've got the Dallas Fed president speaking at 9 a.m., just coming up in about 34 minutes. I don't know if we're going to hear anything new out of a Fed president, but maybe. We've got the PPI on Wednesday. We've got the jobless claims and the CPI, Consumer Price Index, on Thursday. All three of these reports could move the market one way or the other. And then we got consumer sentiment at 10 a.m. That might move the market as well. We want to see, the Fed wants to see consumer sentiment drop. The Fed wants to see the CPI drop. The Fed wants to see jobless claims rise. The Fed wants to see the PPI, the producer price index, drop as well, as a sign of inflation is indeed abating. And it is, but maybe it's going to start picking up some steam. All of those things could move the markets in a pretty big way. I took a look at the sector charts this morning, and the most bearish sector right now is utilities. It's down. If you look at the margin there at the pop-up box, utilities is down 9.39%. Real estate, XLRE, is down 8.3% for the month. Those are the two biggest bearish sectors. Let's look at financials. There it is. Financials XLF is down 3.67%. So what that tells me is utilities and real estate is the place to look for bearish trades based on sectors. The S&P 500 is down 3.34% for the month. And we've seen that. We know we're not surprised by that. All right, let's take a quick look at our portfolio performance. We've got a lot of trades on here. We got some long-term credits. Let me show you these two that came off last week. This one is on the IWM. Yeah, that was a nice short-term hit. We ended up making, let me turn this off here. We ended up making about 16% on this one. I bought it back for a penny, and we netted about 16.7% in a matter of days on the IWM. Had you let it expire, then you would have a profit of 19.05%. I might have done that actually, because when we took it off, it's 10.4. And that was on Thursday, right? No, it was on Wednesday. So yeah, take it off. But if you happen to still be in, the whole thing's worthless. Even with the bounce we got on Friday, the whole thing would have expired worthless. So I sometimes do that. If I don't need the $504, then I might let these expire just to avoid paying 24 contracts worth of commission with a small credit. It's certainly reasonable, especially when the stock is way down here, to let it expire. All right, now I took it off based on the rules. We made 16%, but that's another little twist. You can let them expire if you like. And we had a trade on Mara, another winner. I took this one off. And we're off. I'm gonna have to pause this. Yeah, I took this off based on the rules for a penny on October 13th. I'm sorry, on October the 5th. We got in on the 25th, out on the 5th, and we netted about a 19% profit on that one. And yes, a matter of days. That's how these work. Let's pause for a moment and let's go back to our Lockheed Martin trade. Oh, didn't I? I thought I didn't place it. Oh, here we go. Let me go ahead and place it. Doesn't look like the options are open just yet. We'll see. Mark price $2, but the market, it hasn't opened yet. Sometimes typically the options market will open a little bit after the stock market. And that certainly seems to be the case here, probably because the stock has gapped up so much. So we'll come back to that in a minute. Now I'm moving through the rest of them here. A lot of these long-term ones. Oh, here's the UNG trade that we have. Peter, I think you're long this, aren't you? I think you are. But UNG is, you know, we're approaching, you know, a 10% buyback, buy it back for 2 cents. Currently, the
Yes,
spread.
yes, I'm wrong. Yeah, I was, yeah, I was given the UNG at the lower price. So yeah, I'm still holding it. My target is $10.
I would, you know what I do right now?
Mhm.
I would sell the 8 calls. The 8 calls on UNG. You can go out 30 days. Let's take a quick look at that. So you might as well collect some rent, especially with the stock hitting the 200-day average. It's up today, but at 8, solid resistance. Right there, 8, solid resistance. If you sold the 8 call, typically you go out 30 days, November 10s, the 8 calls are going for about 40 cents, 33, let's say mid-price 38 cents. Time for every 100 shares, 38
Nice.
bucks. So that's something you might choose to do on UNG.
Will do.
Anybody
Thanks.
else that has the stock as well. Okay, the Lockheed Martin is not yet open, so let me pause that and go back to the portfolio. So here's our UNG trade, doing really well. This one is let it expire. You know, if I want to come in, you know, we're up 11.8% since September the 29th. You know, you could do the buyback, 10% buyback, buy it back for 1 or 2 cents, or just let it ride. If you want this 510 back to use on something else, just buy it back. I wouldn't buy it back for more than 2 cents. But just let this. Yeah.
The Schwab shows the credit you mentioned. The spread is minus 195 to 390.
For the November,
The 13th of October, 410, 475.5.
Oh, you want to sell 13 of October for the 8 calls?
No, 410, 47. The October 13 I was looking at.
Are you talking about UNG?
No. I was talking about the spread of Lockheed Martin.
Oh, okay. I thought we were still talking about yeah, it's the slippage is crazy at the moment. We'll have to let that normalize.
Mm-hmm.
And what this is saying here is the mid price is they want you to buy this, sell the spread for a debit. So if you take a look at the slippage, it's probably gargantuan. So let's take a look here. So Lockheed Martin. Yeah, look at the slippage here. At the moment, it's 30 by 290.
Yeah.
So market makers are keeping it wide, at least for now, in order to stop people doing what we're doing. So we have to let this normalize. The slippage is really crazy.
The
So we'll give some time.
407, 5 cents by 380.
Yeah. We're trying to sell the 410s, 35 by 280. And the mid price is negative. So we got to wait. We got to wait a little bit. We've got 26 minutes before the top of the hour. So we'll see if it normalizes. I'm going to leave it in for $1 though. I'm not going to get $1, but I'll leave it sitting there. And if the slippage narrows, which is likely to do in the next 30 minutes to an hour, let me turn off my do not disturb. There we go. Oh, now it's at 67. Now it's at 1067. Let's see here. The slippage is, you see the slippage is starting to normalize. It's still not quite there yet. It's normalizing more at the money. Well, even there, it's super duper wide. Now, Lockheed Martin is a big company. It's not typical. It's because of the news. It's because of all that I mentioned before. The stock's gapped up big. And so market makers don't know what's happening and they're keeping the slippage wide. So we'll have to wait and see what they do.
It's 15 cents in Tasty, but the credit's a nickel.
Yeah. It's we gotta wait. We gotta wait. I wouldn't take a nickel. Let's let it normalize before we get in. 445 by 430. That's gargantuan slippage. And if we get in later in the morning, that's fine too. So let's let that sit for a minute. Actually, before I do that, let's look at the longer term options here, the next month out or the next week out. Yeah, the slippage is still very wide there as well. What I could do here is just see what it looks like for October 20. Yeah, it's still showing a mid price of a debit. So we have to wait on that one. Keep an eye on it though. Okay. So UNG is sitting nice. Let's see what else. There's so many trades I've put on recently. We have some long-term bull puts that are in a little bit of hot water. This one on Hess, you know, after Biden's announcement and what's happening with the Saudis, the stock has come down. That's part of the, you know, double-edged sword, high probability. But if the stock drops hard in this case, then you start losing money right away. And so here's the trade plan on these. Buy it back, buy back the spread for 10% of what you sold it for. And that would net you, you know, what's that, 3 cents, 4 cents, 31 cents, not quite 7.53%, maybe like 5-6% in that neighborhood. If the stock, now we have to wait though. If the stock goes up, and it has today, with oil, I know it's up. And so as long as this bottom holds, we just wait. We might have to wait until November. But if the stock stays where it is by November, tick, 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 we'll make money. We lose money above this break even. All right, so if it keeps rising from here and it has bottomed, we're fine by November 17. But if the bearishness continues, the way to get out of these for a loss is if the stock closes below this break-even line, then you get out. That exact point is 134.65. So the rule is this: if the stock closes below 134.65, and I can estimate it, if it happened today, we're losing about $165 unless the stock gaps down. I mean, if it moves reasonably through the break even, we're trading here or so, there's about $165 managed risk. So we're not actually realistically risking that. We're going to take this off for $165 profit. Now, the thing about these is, because of the way they work, a loss of 165 will take out a number of winning credit spreads. So these things are great as long as the market doesn't move sharply against us, in this case down. Same thing for bear calls. If the market rises hard, bear calls will operate in the same fashion. So what do you do here? Detach, react, follow the rules, and let the markets do what the markets do. Don't get invested so much in I'm down a little bit on this trade. Follow the rules, detach, and react. That's the only way for you to reach that. If you don't reach that level of psychology where you just let the rules dictate your profits and your losses, well, let me say it in a more positive way. When you fully adopt that detach, react, follow rules philosophy, it's really in you, then your psychology will become more peaceful. It's really important. It's really, really important. I'll give you last Wednesday, I had such a busy day, and I checked my positions in the morning, and then I got busy and I didn't check my positions. And then I was like, oh my God, I didn't check my positions. I missed some adjustments. I trade the hedge fund way as well as credit spreads. and I missed some adjustments. And so the next morning I was like, you dumbass, what were you doing? You're supposed to be an example. So I had all that going on. And then I had a little bit of, you know, I guess shame, maybe something, but a negative emotional experience. Like, damn it, I've lost money because I didn't watch my trades. So then I quickly moved that out of my consciousness and I said, all right, my job is risk management. I detached from the losses. And then I went after managing my trades so that I didn't lose more. So I have that embedded in my DNA. Detach, react, let the rules tell you what to do. And I felt fine afterwards. Yeah, I learned. I gotta, you know, I can't let that happen again. So it encourages me to put more structures in place, alerts on my calendar to tell me to check my trades. Now it's weird, and it never happened to me. It hasn't happened to me in a long time, but it did. And that psychology, that stance, detach, react, follow rules, you know, it's in me. And that's how I handle it. All right. So hopefully that landed for some of you. We have a couple of bear calls on long-term bear calls on AWK and Finder. So those are doing fine. Not going to waste time looking at those right now. We have a Microsoft bull put spread. And what I haven't mentioned is that there's a lot of support beneath this stock and our loss point here on Microsoft. Same story. Buy it back for 4 cents, or if the stock closes below the break even, I'm out. Detach, react. Let the rules tell you what to do. It's nothing personal. It's all rules based. Here's one on Match. This is a shorter term one. This one's looking really good. Match.com. Steve, I think, who was it gave me this one? I think it was Earl or Steve. I can't remember. This one's looking good. And this one expires October 20, which is a week from Friday. And it currently has a 99.2% probability of profit. The stock's in big trouble. It bounced a little bit, but that one's looking really good. That one's coming off for a penny. I have this, I'm ordering to buy this back for a penny. Currently, it's worth 3 cents. 12.9. Buy it for 12, sell it for 9. And that's roughly the mid price is 3 cents. So we're not quite there, but we're getting close. What else? UNG, we looked at, I think that's it. IWM, covered that, those 2 trades. So our portfolio is doing really good, really well. And let's take a look and see what's happening with Lockheed. Now it's up to 37 cents. Let's check the slippage here. On the October 4s. Slippage is still really wide here. All right, see the 410, 407.50 shows 0 mid price. That's October 20. Let's try October 13. 32 cents mid price. So let's figure out potential return. Now I could put this in Tom's tools, but you don't really need Tom's tools, at least when you're trading before the 10 a.m. Eastern time timestamp when we get live data. What you do is you determine the width of this credit spread that you're selling. In this case, $2.50. If I could get 30 cents on $2.50 of spread width, my risk would be the credit of 30 cents subtracted from the width of the spread. So let me do that in my calculator here. And I'll tell you what the potential return on investment. Now it's all the way down to 17 cents and 20 cents. So if I got, let's say I got 30, my risk would be 220. And that's a 13% return. 30 divided by 220 is a 13% return by Friday. That's pretty good, actually. Let's see what the stock's doing. So this is selling all the way down here at 410. If I could get 30 cents, There's 13%, 13.6% profit by Friday. Yeah, I'll take some of that. So then I'll go back to my trade here. Now it says 40 cents. Good. Let's cancel, replace this, and drop it down to 40 cents. Okay, so at 40 cents, my risk would be 210. So I'll do 2 contracts. And that'll keep my risk at 420 roughly. And now look at the mid price. It's now down to 5. Let's see if we can get, let me put it in for 35 cents. Oh, heck, let's just go for 30. It pops up there, we might get it. I'm going to try it for 30 cents. That's 13 point something percent by Friday. All right, I'm gonna let it sit there like a line in the water. Maybe we get filled, maybe we don't. All right. So Gerardo, do we have any stocks? Anybody put up stocks in the chat? We can look
Yeah,
at.
I have a comment from KLEO. She say DDOG is not a bad one to look at for Stern CR spread, as it has been upgraded and has a nice support at 200 moving average, and it's off a little this morning, so should offer decent credit.
It was DDOG, DDOG?
Correct.
Okay. So again, news is really important on these. Technically speaking, that's a beautiful place to sell right at 85, maybe a bit lower, but 85 is the 200-day average. Friday, it came up Friday with the rest of the market. And then I'm going to go check the news here. DataDog shares are trading lower after Bank of America downgraded the stock from buy to neutral. So it got downgraded just today. On 10/6, what happened? Let's see. Software says unusual options activity. I like to look at these. I kind of like this one actually. Let's look at the unusual options activity. There we go. So lots of bearish big trades. This one was $245,000 worth of a neutral trade. So that means it probably did a calendar spread or something, or condor, but quite a bit of bearishness here on the November 17 options, October 27. So quite a bit of money has been flowing into the stock in a bearish fashion, big money. So presumably the idea there is that if big money is betting on a bearish move in the stock, that they're not doing that unless they're really sure. And so the implication is that they know something. So technically, so we have a bit of a mixed bag here. Unusual bearish activity on the options. A bounce on Friday with the rest of the market. We got a downgrade today to hold or to neutral from a buy on Bank of America. So it leaves me a little bit unsure. And we don't have to trade unless we're sure, as sure as we can get. So the bearishness it gives me pause. Let's see what we can get though. Let's just see. So now we're basically trading a technical setup. The news is not decidedly bullish on it. That's the problem that I see. So then I'm looking at the October 20 options. These expire a week from Friday. And the lowest I would go, or the highest I would go, would be 85. Right here at the 200-day average. If I did that, I sold at 85. There's 20 cents on a $1 spread, which is what, 20 divided by 80, 25% potential profit at 85. I could get a bit more conservative, drop it down to 15, and 15 divided by 85. Hey Siri, what's 15 divided by 85? It's 17% at a little bit lower. So, and I'd like to be a little bit more conservative. So if you're compelled by DDOG, and I'm going to follow my rules. My rules for sniper credit spreads is that the news must line up with the prognosis. So I think this is technically interesting, but news is negative. So that's the fly in the ointment. Good paper trade. And thanks for that. Thanks for that stock. Was that Mike that gave that to us?
Leo.
Oh, KLEO. Yeah, thanks, KLEO. How you doing, man? Haven't seen you in a while. Nice to have you here with us. Any others, Gerardo?
No, the only other comment was from Tonino about HES is up $5 at open.
Yes, and that's good for us, right? So
It
Hess,
might.
yeah, Hess is moving with oil. Yes.
Excuse me, there was some information, I think on Thursday or Friday about Clorox. There was a previously bad info, and we traded to the, at least I did, to the with the credit spread, and now I think it's another bad news was recently. I don't remember what, was something with data, or I don't remember exactly, but some.
Yeah, I'm seeing RBC cut price target on Clorox down to 138 from 151, keeps sector perform rating. The stock did not respond well on Friday. The rest of the market bounced. Clorox did not. Definitely in a bearish trend. But did you have a trade on this one, Peter?
I had it already. It's closed in profit. So
Okay.
yeah.
Yeah. So now I'm looking at this stock and the technicals. That there is a hammer pattern. Looks like Thor's hammer, coupled with big volume, and that will provide a level of support at 120 certainly, but 125 seems to be a support level. And then I want to check the news on this day. Why, what happened? That was Thursday. The stock just hammered up, pun intended. So that's 10.5. Let's see. EPS 10.5.
Yeah, I think it was something with that cyber attack, something like that. I don't remember.
Yeah. Clorox faces challenges from cyber attack, slow recovery in fiscal year 2025. That doesn't sound like that's good news, but the stock did pop up on that day. Clorox dropped 7.5% on plunging fuel. So it's negative news. So it's another one of those same kind of deals. There's not a lot of positive news on Clorox, and yet there was a big bounce here on Wednesday, slightly higher on Friday, down today, but again, finding some support, or it looks like 125 is potentially going to be support here at this moment. So with the mixed news here, the technicals suggest not down, but the news suggests down. So because of the conflict, I stay away. That's how we're doing so well with our credits here on the sniper credit approach, is make sure there's news to confirm the direction of your trade.
Gotcha.
And mixed news. Yeah. So I don't know what to do with this one. And I would be compelled just to leave it. And technically speaking, it's also mixed. Correction, big hammer pattern. That is one of the most reliable candlestick patterns, is a hammer coupled with extraordinary volume. So who does that volume? Who's responsible? Institutions are. So institutions said, all right, that's a good buy point. Let's buy the stock. Bears took over, and then boom, the bears said, nope. 125 is our price on Clorox. That seems to be what's going on. Institutions seem to feel that this is the right price for Clorox, and they've kept it there. And so far, there's no evidence to suggest they're going to change their minds. Probably won't change their minds. So I wouldn't go bearish on it. And because of this and the bad news, I wouldn't go bullish on it either. So let's just step away and wait to see what happens on Clorox. Yeah, thanks, Peter.
Mike, I have one, if you can.
Yeah, Leo, what is it?
Whirlpool, WHR.
Oh, you know, the housing sector and any company that provides materials for new houses, they're under trouble. Home Depot as well. Look at Home Depot.
Yeah.
Whirlpool. I'm liking this one, Leo. Why did I say that? Well, look at this 125 support here.
Yeah.
And it didn't rise with the rest of the market. Do we have any negative news to look at here? Well, no news on it after 922, but technically speaking, it's really beautiful and down more today.
Mike?
So
It's part of the
Whirlpool
George.
has a very
George
high
list.
debt to equity ratio.
Yeah, George list.
is George's list?
Is the
Yeah.
George list, yes.
What do you think we should do, George and Leo?
Well, I think it's definitely a call spread.
Yeah.
Yeah,
Where
this debt ratio is almost 200%. So they're going to have to refinance and it's going to be expensive.
The debt ratio is 200%. That's terrible.
Yeah. So maybe a medium term, long term
Yeah. I'm liking,
call credit spread.
I would go as close as 125, but I'd like to see what's at 127.50. Do you see why? There's really massive, was support there, and now that's very strong resistance. So I like 127.50, but 125 you can make a case for as well. George, how do you find those stocks? Do you have a way to find, you're looking for debt, fundamental information on these stocks?
I'll have to go back and look, Mike. It was just something I was reading. It could have been Yahoo Finance, or it could have been Bar Chart. I'm not sure.
Remember you said CNBC.
CNBC. Okay, that was it. I read that too. I'm into all kinds of dirty books.
All right. Well, here, this is October the 20th. So this would be an 11-day trade. It expires a week from Friday. I'm looking at this slippage, which is wide. But heck, if we could get 20 cents on a 127, 128, that would be a good trade in my book. And so now it's showing 25 cents. That's excellent. Let's go get some of this. That would be 75 cents of risk. So 75 times, what is it? 5, 6 maybe? Hey Siri, what's 6 times 75? She's not listening to me here. I got to do it on my calculator. 6 times 75. 6 times 75. Yeah, there we go. 6, 7, actually 6 contracts gets our risk to 450 if we get 75 cents of loss or credit risk. Now it's at 22 cents. I'll take 20 on this. Let's try for 22 cents. Let me post this in the Sniper live feed. I like this one, guys, quite a lot. All right. It's the power of community. 25 cents. Let's try for that. Monitor. Wait a little bit. I got it for 25 cents. Excelente. And now that we're at the top of the hour, what I'm going to do, this is our performance of everything we've done in snipers, including the current open positions. I meant to show you that earlier. Massive 84% win rate, 10.36% average profit over 15 days. That's long-term. and short-term credits and a few iron condors mixed in as well. So we're doing really well. Now I'm going to go into the scanner here. I'll type in WHR. And let's see if it finds anything for us. If not, I'll just build it. No. All right, I'm going to build it. On today's date. And again, what we just sold was the October 20, 127, 128 call spread. I actually got 27 cents in the simulated trading platform. If anybody's going after this and you get filled, please share your fill prices. That would be awesome. Love to hear what you're getting filled at. The simulated platform oftentimes will give you better fills than live. At least in Thinkorswim, that's the case. So I'm just going to build it right here. It's a little faster to do it this way. And let's hit risk
Got it for 24 live.
24 live. Okay. Our fill prices here simulated 125 and 98. So I'll put those in.
23 on Robinhood.
23. Zooming in a little bit. I'll go from 110 to 140. Let me track it on one of the prices that was live. Oh, tell me again what you got, Leo.
23.
23.
I was trying 24 and then I lost my patience.
Mikey,
24 on TOS, Mike.
I got 25. I got 25 on Thinkorswim.
Awesome.
Well, strike one for Canada.
Yeah.
Because it's Thanksgiving today.
Oh, happy Thanksgiving.
I got 25 also on TOS.
All right, so we got some 25s. I'll track it at 20. I got 27, but 25 seems more reasonable. Probability of profit is 77.4%, but that would require to lose, we'd need to see the stock above the break even. And doesn't look like that's happening. Remember, on Friday, the markets ran up hard, but not Whirlpool. And it's in the real estate sector, provides goods for new houses, right? So that's a really good one. I like this one a lot. It's news backed. The stock is dropping when the markets were rising on Friday. And it's dropping more today. This is a really nice looking trade. Let me post this up in Snipers on the live feed here. So there's the actual risk graph. I'll track this one. And then another idea for you is if you're not in UNG, you know, just see where UNG is now. Yeah, see, it's struggling with 8, but man, that's a nice bullish run. You could consider coming in here and selling a 7, put spread 7 by the 650, or if you want to be a little safer, sell the 650. Let's do one here. Might as well, right? I'm going to go longer term. Let's see what's there. Let's go to, I'll do a 30-dayer. And so I look at the credits here, 30-day trade. If I sold at 7, we'd get 8 cents. 8 cents on a 50-cent spread is 42 cents of risk, which is over 20% on this trade. If I sold at 650, I'd only get 4. So let's say we got 5 on that one. Then I'd have 45 cents of risk, which is just under, let's say it's about 11%. I'm going to go for the 7 here because of the strength in the stock. And that's going to be 40 cents of risk if we get 10 cents. So I could literally do 21 contracts, right? And let's see if I can get 10 cents here. Let me give you this trade as well. I'll take 9 as well. The thing about these longer term credits is you don't have to get in right now. Just leave it sitting at 10. And in the event the stock comes down a little bit, then you'll get your 1 cent that I'm waiting for. All right, everybody. I hope you've gotten up, you're standing up, and you're standing for your rights and making it happen. This is a wrap for today. Thanks for being with us. We have earnings coming up today, Earnings Mastery Live coming up at 2 p.m. today. And then we've got Jeff Kotkamp on Wednesday doing four-legged trades at 8:30 Eastern time on Wednesday. It's free.
Clayton.
Is that not what I said?
You said Jeff.
I did. Oh yeah, sorry. It's Clayton. Clayton Elliott will be teaching a free class 8:30 Wednesday in the same live community trading room that we have open Wednesdays, Thursdays, and Fridays. So it's an hour earlier on Wednesday. Clayton's doing some really cool stuff with long-term credits and iron condors and using Delta to manage.
Another quick question.
Yeah, Johnny.
Why did you choose the October 20th versus the 13th? I just sat down. I don't know if I missed something.
For what stock?
For the Whirlpool.
Yeah, Whirlpool. Yeah, I just went out 2 weeks on it. Well, let's see. What did I pick? I picked November. Yeah, you could do a shorter term one as well. I think I picked November. Oh, where am I at here? There we go. October 20, which is about what, 2 weeks, right? 11 days.
Yeah, I mean the 13th looked like it has some nice. It looked pretty nice.
You could try that too. Yeah, you could try the 13th of October. The general system I use is 2 week options on the short-term credits, but you could also try here as well at 127. It says 10 cents. If you can get that, that's 11%. So I went the next week out to get our credit up to quite a bit higher. And again, as I said in the beginning, there's no one way to do this. You want to go shorter term, you get less credit. It would have been quite a bit less actually here from 30.
Actually, I'm looking at the 10-6 data. That's what was the problem.
Okay. Gotcha. All right, Gerardo, have I missed anything?
No, I think that's pretty much. We have also a roundtable tonight with Knights, and it'll be a beautiful week.
Lots of good stuff happening. All right, we love you all. Have a great day. Have a great week, and we'll see you in some of the myriad of webinars we do here at MWTC. So I look forward to seeing you all later in the week. Have a good day. Pura vida.